Is it time to start running away from stocks? We see stocks like Intel yesterday after reporting earnings down right now in pre-market 22.9%. Intel pre-market down 8.41%. And if you look at last night, the Nikkei was down 5.81%. The HSI down 2%. We look at the volatility index this morning. The VIX is up another 11% on the session. Notice we are now above 20 on the VIX. Is it time to be fearful in the market, or is this going to be nothing more than a buying opportunity? Now, I warned you guys about this in the past, and we learned this week the Fed clears path for September interest rate cut. But what have I been telling you guys for quite some time? I said the Fed never cuts interest rates out of the goodness of their heart, and every time they go on an aggressive rate cutting campaign, it has always caused the stock market to suffer a major correction. This time is going to be no different, and we're starting to see evidence of that now. Now, here's another article real quick. The Dow dropped nearly 500 points. Is bad news on the economy no longer good news for stocks? So for quite some time, we get bad economic news come out, and guess what? The stocks rally to the moon. Is that going to change today, or will the news that comes out this morning be enough to propel stocks up higher? 8:30 a.m. We have the average hourly earnings. We have the non-farm employment change. We have the unemployment rate. And it's going to be critical. If the market reacts very negative to this news, it could spell a lot of trouble for the stock markets today. We also take a look at this. I warned you guys about this a few days back. Warren Buffett was selling shares of B of A stock, and now he continues to sell. This is the 12th straight day where we have big investors selling stocks. Now, when the big boys get out, what is likely going to happen to a stock? We look at Bank of America real quick. And look, Bank of America has been on the decline. In pre-market, Bank of America is down another 1.7%. So how do we navigate these markets? Do we look for buying opportunities, or is it time just to sell everything we have? Tesla yesterday was down 6.55%. Pre-market down almost another 1% on the session. And we look at some of these stock charts. For instance, the IWM, look at what we did, all right? We had a shooting star candle, big confirmation candle yesterday. And if we go ahead and we adjust the Fibonacci retracements, look at where we're trading in pre-market right here, where near the 50% Fibonacci retracement level. The MACD indicator is also at elevated levels, and it has now got a fresh cross to the downside. We look at the Dow. The Dow came right into our resistance zone, rejected yesterday, and in pre-market, the Dow is down another 0.7%. You can see right now it's hovering between the 38% and the 50% Fibonacci levels. And when we look, we can see the Dow is actually hovering right between the 38.2 Fibonacci level and the 50% level. Will we see the Dow going a little bit lower? If indeed it does go down this low, watch out, we could see much lower prices. Now we look at stocks like Nvidia in pre-market down another 4.84%. And people thought Nvidia could never go down. It'll never go down. AI. Well, you know what? Once the selling starts, watch out, things get very dicey. We look at Microsoft in pre-market down 2% on the session. However, after the news comes out, maybe the market will perceive that news to be good, and maybe this will be nothing more than a buying opportunity. Let me know in the comment section down below. Do you guys think today is going to be a buying opportunity in the market, or is it time to just simply run away from stocks as fast as we can because things are about to get extremely worse? We come over here and look at the dollar index. In pre-market, the dollar index is slightly down 26 cents on the session. And for all intents and purposes, basically an inside day. But then as we look at gold, look, fear coming into the market. Gold is almost back up here, all-time highs. And let's not forget the ABC pattern that we have up here, about 25.86. Now, if indeed we break the swing point, that would validate that pattern. But we've been talking about this. We're looking for gold to come down right around the 61.8. And that's exactly, where gold ended up turning and getting a bounce on the way back up. Now, it really needs to clear this recent high. Then we come over and look at 10-year yield. It looks like it's fallen off a cliff. And normally when yields falls, that is good for the market, right? How come this time we see yields dropping, but we also see stocks dropping as well? Think about this. When people are fearful, what do? They flee into safety. Bonds being the safe haven. When everybody starts buying bonds, it pushes yields lower. So now we come over and look at the QQQs. Notice where we're at. We're below this little support area that we had down here, trading in pre-market down 1.79%. Now, this is going to be quite a large gap on the way back down again. And keep in mind, we already have one gap, two gap. This is going to be gap number 3 in which we have not filled. On the daily chart, the MACD indicator has a good separation of the lines to the downside. It looks like it may be in the early stages of trying to firm up, just not there yet. On the 4-hour chart, we got a bullish cross of the MACD lines yesterday, and looking pre-market, we're already down lower. Is that going to make the divergence even more evident? We look out here on the 1-hour chart. 1-hour chart, the MACD lines are crossed to the downside, but right now we're trading below all these lows out here. Then as we look at the 30-minute volume profile levels, I like where we are today in relations to the profiles. If we go ahead and we look at this line right here represents where we're trading right now in pre-market. Now, a lot of this is going to change once the economic news comes out at 8:30. But one thing that won't change is right now we're trading below the low. Now, there's two different ways we can play this. One, simply look for lower prices. But then two, we can either use the low out here from a few days back at a price point of about 454.14. If we get back above that, then we can target yesterday's value area low, which comes in at 456.01. Then target the point of control, which comes in at 459.13, and then all the way up here at value area high at 465.32. Now, I think it's a little bit far-fetched to think we're going to run all the way up here towards value area high or even towards the upper part of the range from yesterday, but who knows? If we get a very positive reaction to the news today, crazier things have happened in the market. I want to make everybody aware, Apex 7 a massive 80% sale off all their valuation accounts, pass in as little as 1 day, and you can also get a 150K account for only $40. You get a 250K account for only $40, and you get a 300K account for only $40. So if you want to take advantage of this offer, use the link in the description box down below and use the promo code Mike at checkout. Now, if you want to be more conservative, the second play would be wait and see, can we get back above value area low? At that point, if we do, then we can target the point of control. So depending on how aggressive of a trader you are will depend on which methodology you may want to use in terms of looking for prices to go a little bit higher. Keep in mind, when the selling starts though, it gets very, very ugly, very, very quick. We come over and look at the futures markets. Right now, we can see overnight, we had a range of 338 points. We look out here on the composite profile and look what we had. People thought I was crazy talking about the high volume area and the untested point of control that we had right down here. And look, we are almost there. All right, this has been quite a sell-off from last night. And we're going to see, do we start to firm up down around these levels or do we continue to cascade lower? Keep in mind, if the news is bad and stocks actually rally, that would actually be favorable for the stock market. Then we come over and look at the daily profiles. Notice right below price, we do have an untested point of control at 18,598.75. With that being said, does the news come out and we just simply flush the lows, basically running all the stops, and then the market starts heading back up higher? That most certainly is something I will want to pay attention to this morning. And if we come down here and look real quick, I pull up Bookmap real quick. I know I got it zoomed down a little bit, but I want you guys to pay attention. We have a lot of liquidity sitting around 18,600. That is right above that point of control. So we know the market a lot of times is attracted down here to that liquidity. Is this time going to be any different? Now, when we look at the overnight volume profile levels, you can see they're still developing, not there yet. But if we get below value area low and we start coming back up, maybe we get that rotation up. And if we do start popping up, this area on the profile is an area I would want to focus on. It's a minus development area. That's going to be anywhere from about 18,800 up here to about 18,084. But keep in mind, we're going to have to start, showing some signs that we're going to firm up. And a lot of that is going to depend on the news out here this morning. Now, when we come over and look at the SPY, you can see we're trading right here near the swing lows from a few days back. MACD indicator on the daily chart looks extremely weak, but look where we're at. Right within the minus development area. That's an area where we could see a turn in the market. The first time we come in there, usually we get rejection back out. And then if we come back down there again, we start to flush lower towards the next high volume area. Then on the 4-hour chart, we did get that bullish cross out here just the other day. And we're going to see, does this set up a major MACD divergence? On the 1-hour chart, however, we do have a good separation of the two MACD lines to the downside. But if indeed the market opens up down here and then we start to firm up, that could be even more divergence down here near the lows. Then out here on the 30-minute chart, we are trading below all the recent lows. And we look at the volume profiles from yesterday, we have value area low about 539.51. The point of control will be about 542.05. Value area high will be 545.51. Now note, if we can get back above yesterday's low, then I'd want to target the point of control. Then I'd want to target value area high. Then we can look, can we go ahead and rotate higher through the volume profile? However, I want to warn you right now, there's a lot of fear in the market. And again, that is very evident. Just pay attention to the VIX. If the VIX is climbing, you know the fear is still climbing in the market. The VIX starts to drop today, then maybe, just maybe, we might be able to get a bounce in the market, but you got to be very mindful, right? When the selling starts, if this indeed is going to be the real selling in the market, watch out. You do not want to jump in front of a freight train. So the news has come out, and what do we see? Average hourly earnings down to 0.2 versus a forecast of 0.3. However, non-farm employment change, 114,000. This is one of the lowest readings we've seen in several years. And look at the unemployment rate ticking up once again. And this is what I keep saying. The Fed does not cut rates out of the goodness of their heart. Something is already broken. And look at the VIX. Right now, the VIX is at 21. It's been quite some time since we've seen the VIX at these levels, actually going all the way back to April. And it only was up here for a very brief period of time. We come over and look at the NASDAQ and look where it came down to, right towards that high volume area, that untested point of control that so many people thought I was crazy to think the market could make it down towards. Now, the question is this an overreaction? Are we getting ready for a buying opportunity? Because on the 4-hour charts, look, 1, 2, 3, 4, 5, and work on our 6th down candle in a row. Are we going to get 7, 8, 9, 10? Or are we going to start to flip and start to bounce on the way back up? Now, as we come over and look at the overnight volume profile levels, look at the range in the NASDAQ, 471 points before the opening bell. And look what we're starting to get. We're starting to get a buying tail on the bottom of this candle. We come over here and we look. Value area low will be 18,508.50. The point of control is going to be 18,884.00. Value area high will come in at 18,749.00. So how do I want to handle this? Well, as long as we're above value area low, I want to look for the market to come back towards that minus development area we talked about earlier. And if things get crazy to the upside, then I do want to target yesterday's value area low, because yesterday we closed below it, which means it's a high probability we're going to work our way back up towards that price point. Now, as we come over and look at the S&P 500, what do we see? Value area low comes in at 5408.25. As once we get back above it, I want to target all higher prices. The point of control will be 5428.75. Value area high will come in at 54.75. Now, if we can break above value area high from the overnight, and this is quite a large range, 96 S&P points for an overnight range is absolutely insane. But if we get above value area high, we do want to look for a target potentially all the way up here towards the point of control. And I very seriously doubt we'll get the complete daily rotation all the way back up the 5540. If you guys want to learn how to trade double bottoms using order flow, watch this video right here.